Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Okay, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And this is the first show I've ever done where I am actually running it all by myself. So do this to get those cords out of the way. And if anybody has any questions, please let me know. If I get tripped up on the equipment and sound, I do apologize. But I am Debbie Marcoux. I am the Mortgage Mom. And today we are talking, Mikey, and I've got Mikey here to guide me because I'm going to be doing this by myself moving forward. Let's make All right, it's working. We're good. All right, perfect. So I just want to make sure that everybody can hear me and that you guys can jump on. You can ask your questions. This is a show that you guys can get interactive with me. So I do want you to ask your questions and I will read them out loud and answer them for you. But again, moving forward, I am on my own. Mikey is beginning a new career as an EMT, which I am so proud of him for, but he will not be with me next week. So I've got to learn how to do all of this by myself. Chief Manny says we can hear you and see you. So awesome. All right. So we are talking today about the Federal Reserve. The Fed did have their meeting today. Actually, Manny, since you are watching and we're doing this on a new computer that I'm streaming by myself, can you tell me if I sound too loud, if I should turn the volume down a bit? Wait for his answer. I feel like I'm peaking, Mikey, so maybe we need to bring it down just a little bit. If anybody else feels like I am too loud, please let me know and I will turn that volume down. New computer, new setup, and me all by myself. So here we go. We're talking about the Federal Reserve today. The Federal Reserve did not cut interest rates. They paused rates. And as a matter of fact, they actually made it sound like we might be in store for a couple of their meetings to go by before we would see another rate cut. Many are actually blaming Trump for the reason that they are not cutting rates right now and that they are pausing those rate cuts. And so we are going to jump in and we are going to talk about that. So Tiffany did say volume sounds good. So Tiff, thank you so much. Appreciate it. But the first thing that I want to do before we jump into the Trump stuff, but it is important that we do talk about it because it is something that is all over the news. And I make sure that my show is talking about things that are happening in real time to keep you abreast of the market and what is taking place in the mortgage and real estate world. So the first thing that I do want to start off with is talking about the Federal Reserve. So I am going to read the press release that they gave everybody, and then we'll jump into what I observed in the actual meeting, in the Fed meeting, where they were he was answering the questions from the press. And then I'm going to actually read to you an article that I found that was talking about some of the issue with Trump. And so we will jump into that, but it is something that we will get to. So Federal Reserve press release. Recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to maintain the target range for the federal funds rate of 4.25% to 4.5%. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data to evolving outlook and the balance of risks. The committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflationary pressures and inflation expectations, and financial international developments. So that was their entire press conference release, basically saying that they feel that the job market is strong, that the inflation is still too high, and that they don't feel that the economy is actually cooling the way that they might have previously been anticipating. So they feel that the Fed funds rate, where they have it at currently, is sufficiently restrictive enough, which means that it is going to keep us from continuing to spend and inflation continuing to rise, and that they feel that the economy is strong enough that they do not need to cut that rate back any further, that our economy can handle those interest rates at those levels. So that is basically what they said in that release that I just sent to you. Now, as I mentioned at the beginning, many people are saying that this is an issue with Trump. So the first thing that I'm going to tell you is that I sat and I watched the entire press conference. The press conference had many, many questions coming out around him. They were wondering if, the fact that he has said that he wants interest rates to be reduced and he wants it done, very, very quickly, basically immediately. We all know how he talks. And the Federal Reserve, the questions were coming at him with, since this is what President Trump is asking for, are you guys planning to reduce these interest rates? And the Fed stayed very strong. And number one, was very, very neutral, very tight-lipped, would not talk about whether any suggestions that were being made from any person with any political party, including the president, that they would not actually make any kind of statements about. So, basically saying that we are a neutral party. And so this is something that I talked about in quite a few episodes that we've done in the past, is that, and there was one actually that was about 2 months ago that I did. It was right before the election. And it was, what the different interest rate environments were throughout history of the different presidents, right? Democratic and Republican. And in that show, I actually specifically said that the Federal Reserve is a neutral entity. They are not taking direction from any individual person. Now, do I feel like, there's still politics in there somewhere and there's still, some movement? Probably that's human nature, right? But on paper, in black and white, they are a neutral party. They are a neutral entity that is supposed to be making decisions based on what is best for our economy. And, he basically was tight-lipped, would not answer any questions whatsoever. They came at him with questions about tariffs and wanted to know if he felt that if tariffs were put onto goods that people were purchasing, if that was going to, in his opinion, increase inflation and make things worse. He was asked so many questions about so many things, and he continued to remain tight-lipped. Now, you then run into, you Google or you go to your Yahoo or you go wherever, and you start to type in information. And of course, the news is coming out with way different headlines, right? So this one comes right off of, let me find it. This one comes right off of Yahoo Finance, right? And it says, cautious Fed holds rates steady with Trump unknowns looming over outlook. So again, what you're hearing and what you're seeing and what is coming from media is not necessarily what is actually happening. So I don't want to come right out and say that the Fed decided today to cut rates because they are nervous about the new administration. I don't think that that is a fair comment after what I watched during the actual press conference. So being fair to, Mr. Powell, he did not say a single word that would have anticipated that there was anything that was pausing those rate cuts beyond the fact that he felt that our economy is strong, that the interest rates that we have been at, we're withstanding them, right? We can handle them right now. Our unemployment rate is low. We're at 4.1%. And he didn't feel that cutting the rate made any sense at this point in time if jobs are not in jeopardy, economy is not in jeopardy, people are still buying goods, everything is still moving along, and they feel that the economy is very strong right now. So that is what I took from that press conference, not what you guys are going to start to read all over the internet, which, again, where some of these guys get this information, I have no idea. I don't know if they do get it, from somebody on the inside. I don't know if they make things up because they want to get us excited or upset or, push the narrative in one direction or another. But it was not what I took from that press conference today. Now, what I did take from that press conference today is that interest rates where they are at are restrictive. And they are sufficiently restrictive, which means that they need us to stop spending money. They need us to cool it off. They need companies to stop increasing costs on products and goods. They need things to continue to come down to get the inflation under control. And at this point in time, our job market is still strong. He was also, asked a question about the illegal immigration and whether or not moving all of these people out, deporting them all was going to place strain on the job market. And were they concerned about that? Again, tight-lipped, not an answer. Said he would not comment to that. He can't comment to something that is a speculation, not having any idea what is actually going to happen in the future. So he was very, very neutral. They are there to be a neutral third party. I am not agreeing or disagreeing with his decision. I don't like where interest rates are. Obviously, I'm in mortgage. I want interest rates to come down. I want everybody to get a better interest rate. I want everybody to have a payment on a home or be able to buy a home that is affordable. This is not an opinion about whether or not he should have cut rates, shouldn't have cut rates. But this is me saying that, I felt that it was a very, very neutral press conference and a very neutral decision to pause those rate cuts. Now, the other thing that I did take from the news conference was that it doesn't look like we're going to be getting those rate cuts in March. It looks like March is probably, there's not another rate cut in sight. Now, we've said this before. We've said there's no rate cut going to come for the next meeting. And then all of a sudden, boom, there was a rate cut. Or they're not going to increase interest rates. And then boom, they increase them anyway. We're talking about 6 weeks away from today. There is a lot that happens between now and 6 weeks from now. A lot of moving parts. There's a lot of, reports that come out, jobs, inflation, all of those different reports still come out. And then those have to be taken into account before they make their next decision. Now, one of the things that I did see in here, and I did agree with in this article that I read on Yahoo, was that he did say, I'm not going to have any response or comment whatsoever on what the president said. Powell told reporters Wednesday after the Fed held interest rates steady following 3 straight cuts. It's not appropriate for me to do so. But it was clear from his comments that several unknowns about the economic policies of the new Trump administration could have a future effect on Fed monetary policy, forcing the central bank to remain cautious about any further actions for now. So basically what Yahoo was saying is that with the unknowns around all of the different changes that the new administration is making, that they feel that part of that is pausing the rate cuts for now because the Fed cannot make decisions about what is going to happen in the future, not truly knowing how the changes that are being made right now within the administration are going to affect things like the economy, inflation, and jobs, right? And the economy. So I did agree with that part of the article. You could tell that there was definitely more to what Fed Powell's I guess his opinions would have been on some of the moves and some of the changes that the administration is making. But he was very, like I said, very tight-lipped, very neutral as he should have been, did not answer a single question, did not speculate, and did not give any information, period, whatsoever. So if you read something online that tells you that this is Trump's fault, that they didn't cut rates, it's Trump's fault this, Trump's fault that, I'm going to tell you right now that that is not what was said. Now, you can form your own opinion and you can believe what you want to believe. I'm not telling you that you shouldn't. You can think that the changes that his administration are making are not correct. You can feel very strongly that they are correct. But you know what? Just remember that what you read and what you see on media is not always accurate. So the bottom line for today is Fed did not cut rates. It's not looking like they're going to cut rates come March. Inflation is still higher than what they want. We are at 4.1%. I believe they said it was actually 4.1% was our jobs, our unemployment, and 4% was our inflation. And they want to get that inflation down to 2%. So that is what I read today. And what will happen, come March after another 6 weeks from now, we have to wait. We have to see. We have to watch. Now, one thing I want you guys to know, and I've said this before too. So here's a little bit of, bright light around, what is happening. When the mortgage interest rates change, it has nothing to do with the Federal Reserve prime rate. The mortgage interest rates, as I've told you guys numerous times, are based on notes, bonds, mortgage-backed securities, treasuries. So we are very much like a stock market in that our mortgage rates go up and down and up and down and up and down, and they move on a daily basis depending on where people are putting money. When the anticipation for today was that rates would not get cut. What happened today was that rates did not get cut. So if you guys remember back to when they were cutting the rates and all of a sudden they cut the Federal Reserve prime rate and then mortgage rates shot through the roof, right? Why? Doesn't make sense, right? Sure doesn't. Today, we expected that there'd be no rate cut and there was no rate cut and mortgage interest rates are actually getting better. So the positive news is honestly, since October, interest rates for mortgages have been getting worse and worse and worse and worse almost on a daily basis. Still much, much better than they were about a year and a half ago, but definitely higher than where we were in October. In October of 2024, those were the best interest rates that we had had in about 2.5 to 3 years. And then we just gradually on a daily basis started getting worse, 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 and worse. Now, all of a sudden, over the last couple of weeks, with the anticipation, which you guys have heard me talk about in previous shows, with the anticipation that there'd be no rate cut, that they were going to hold things steady, our interest rates have actually started to get a bit better, which is great. And as of today, with the announcement, no, we're not cutting interest rates, we actually have a little bit better interest rates again. So hopefully over the next couple of weeks, next 3-4 weeks, they will continue to improve. We go in the ups and downs. We go in the peaks and the valleys with mortgage rates. We will see a nice lowest we've had. We'll have a nice little run for about a week or two where they go down, go down, go down, go down, and then they stop. And then all of a sudden they'll shoot back up, not quite where they left off the time before. And then they'll stay there and they'll kind of hold, and then they'll start to slowly come back down. So right now we're in that coming back down drop off period, which is fabulous. And I'm looking forward to them continuing to prove a little bit more and a little bit more. So that is very positive news for anybody that is looking for a mortgage, looking for a refinance, looking to do a purchase. Interest rates are definitely better today than they were a week ago and better than they were the week before that. So I can see Why Not says hi and good afternoon, everyone. What should the conditions be after March for interest rates to come down? So honestly, what they're looking to do, and they're basically, the Fed said today, we're pausing rate cuts. They said at their last meeting that they were only expecting to do 3 rate cuts. Maybe it was 2. It's actually 2. They were only expecting to do 2 rate cuts in 2025. So they're not going to do those rate cuts unless they see that either the inflation is cooling and getting, on its way to that 2% level, with certainty. Jobs, there's tons of unemployment, so we're having an issue with jobs, or there's something going on with the economy that we're having an issue with that. But for as long as they feel that the economy and jobs can sustain that higher level, that restrictive funds rate that they've got us at, they're going to only do rate cuts when absolutely necessary. So the chances of us having very few rate cuts in 2025 is very possible. Now, I kind of have a feeling that we'll probably see more like 3 rate cuts in 2025. We had 3 rate cuts in 2024. I do think we'll probably get there. And I said that for a really long time. I said that I didn't think we were going to see rate cuts until fourth quarter of 2024. That is exactly what happened. I know that they're saying 2 rate cuts for 2025. I believe we'll actually see 3. That's just my opinion, having been in this for so long and doing what I do and watching and reading and, understanding the economy and the inflation in the market. I think that we're going to see more like probably 3 rate cuts this year, but that's just my opinion. But March, we're probably not going to see a rate cut. And anything beyond that, I wish that I could tell you what we will see. I don't have a crystal ball, but what they are looking for to answer that question is that they're looking to see inflation come down. How does inflation come down? Inflation comes down when prices of goods and services also starts to come down. We have been spending just absolutely crazy amounts of money. Every single consumer in the United States has been overspending. That is why so many people are tapped out on credit cards. There are things like groceries that we cannot control the price at the grocery store. Gas at the pump, we cannot control the gas at the pump, the price there. Those are things that are out of our control as consumers. But what is in our control is the spending, the consumer spending. And that is what needs to drastically come down. Because when we spend less, then the retailers that are selling those goods and those services need to bring the prices down on those items in order to get people to buy. And so what they're really looking for is they're looking for that inflation number to come down. They're looking for consumer spending to go into the toilet. They want to see people stop spending. So when we start to see those things happen is when we will start to see those rate cuts truly come. And we're not going to see that inflation come down until, number one, everything has come down. So we need the price on things that are out of our control, such as oil, which would be your electric at your home. We all know that our power bills have been insane. The gas at the pump needs to get better. So a lot of that is oil driven. Oil should start to come down if what is truly going to happen is what Trump claims, drill, baby, drill. If we're producing more oil per barrel should come down, which in turn should bring those costs for our home energy and gas pump prices. That should come down. The other thing is that mortgage interest rates, if you guys do go back and you look at old graphs and things, I will tell you that although it's not correlated, they are not connected. Many times we will see that when oil prices, the barrel cost of oil goes down, many times our mortgage interest rates actually follow. So if we can get interest rates down on oil, the hope would be that we would also see, again, mortgage rates start to come down. So mortgage rates come down, housing starts to get a little bit more expensive. There's inflation number one. Then we've got our oil at the pump and our electricity and all of those things. There's a little bit more inflation that can start to come down. So, we need, on top of that, then what we can do as consumers is to literally stop spending. We've got to do that. You guys have to buy things that you need, not what you want. Or this is just going to be a vicious cycle. The economy's strong right now. It's because people are buying things. It looks like Diosa says, what are the rates currently? So great question. So interest rates for mortgages right now on average are about 7%. It depends on obviously the loan type, your credit score, the down payment amount, the property type. There's so many things that go into what an interest rate is that you get offered and you get quoted. There's so many things that go into that determine what the actual interest rate is. But if you're asking me for just a standard, conventional 30-year fixed, 30% down payment, we're probably about 6.875 to 7%. If you're looking at a government loan, an FHA, a VA loan, standard, assuming great credit, nothing to do with the property, good debt ratios, everything again that's involved, we're looking at about a 6.5% interest rate. So interest rates are between about 6.5% and 7%. We start to get into some of the more risky types of loans. So we've got our non-qualified mortgages, which would be bank statement programs, debt service ratio, which would be investment property loans for investors. You start to get into those types of products, or you've got somebody that has a lower credit score, or you have somebody that's had mortgage lates on a mortgage. Those interest rates are going to be really starting at about 7.5%, and they could go up to as high as 8.5% to 9%. So it does depend obviously on the loan program. It depends on the property type. It depends on the amount of down payment. It depends on the credit score of the borrower. It depends on a lot of things that we're doing. But I would say on average, we're about 7%. Govy loans, FHAs and VAs are going to be in the mid sixes. And then some of the other types of loans are going to be in the mid to high sevens. So I hope that answers your question, Diosa. And then Why Not gave me the big thumbs up. So again, I want to remind everybody, when I do this show, it's interactive. You guys are welcome to ask me questions. I am happy to read them out loud and answer them for you. Today was truly just a show that was around the Federal Reserve, what was said, what was the press conference, what did I take of it? Again, this is me, this is my opinion, the mortgage mom. What did I read between the lines? What opinion did I personally form from what I heard? The goal of this show is to keep you informed. The goal of this show is to educate you. That is all that I do this for, and no other reason. I want to make sure that you guys know what is happening in the real estate and the mortgage world. And in that, where I talk about interest rates and we talk about other things that are happening, they tie into, where are we at with interest rates and what kinds of loan programs can we get you? So I am here. I'm here every week. I'll be here again next week, 1 p.m. Wednesday, Pacific time. I would love for you guys to join again. I'm bringing you a new topic every single week. If you want to know when I go live, you do not want to miss a show. You want to do it live to ask those questions and get those answers immediately. Make sure that you do text the word LIVE, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That is the phone number to call my office. You can go to my website at mortgagemomradio.com. You can send me a message right through the website. It will email me. I will respond to your questions. It is me that it comes to. Diosa says, thank you for the clarification, and you are very, very welcome. It is my pleasure. But I will be here again, and I think I did pretty darn good. I ran the show myself. You guys didn't get any commercials, so when I start feeling a little bit more comfortable with all the equipment, doing this by myself, I will maybe start to insert some commercials again. But it looks like it went pretty smooth. So thank you guys so much for being here today. I don't see any more questions that are coming through the chat, so I am going to stop it. I like to do about 30 minutes at most. I hate to bore people. And again, reach out to my office, send me an email. Let me know if you have questions. I am more than happy to answer those for you. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. I hope you guys have a great rest of your day. I'll be back next Wednesday. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.